Good morning, ladies and gentlemen, and welcome to the show. Thank you for tuning in. Glad to have you guys here on this Monday, the 6th of December, 2021. Now, I did a show this weekend and had a lot of views on the show. A lot of people watched it. And I didn't elaborate in too much detail, but I basically said that there's a crisis coming, and probably centered around March. I'm thinking to myself, it could be a little bit earlier than that even. Now that I'm watching data come in, rapidly data is coming in, the story is unfolding very quickly. Let's get in there and let's open up the charts right here. Take a look at what's going on. The first thing I want you to do is take a look at this article from Bloomberg. And I'm just going to let you read it. It's about this new Omicron. It's an article from Bloomberg. Well, I'll just give you guys a minute to read this. I know normally I read stuff to you guys, but just go ahead and read it just for a minute, see what it says. Now we're going to take a look at another article. I'm going to let you guys read from Bloomberg again. Okay? Those are two articles from Bloomberg. And now we're going to stop here on the silver price. Now, what I want to say is this is what I'm expecting. I'm expecting a massive slowdown in the world, not just the United States of America, not just Great Britain, not just everywhere. A massive slowdown entering into the very early part of this next year. But I don't think it's going to last, but it's going to have some very, very profound effects. And one of the effects is, like any massive slowdown, they have to support it with stimulus. This is just a fact of life. They can't let the entire world's economy completely collapse, because that's what supports them. That's what keeps them in their positions of power. And they know if they let things go too far, that they could lose control over all of that. So what they have to do is whether they like it or not, they have to go back to stimulus. The problem is we've been through massive stimulus programs already. We've created inflation. I shouldn't say we, they. They have created inflation. First they denied it. Now they accept it. If we have to go into massive stimulus again, well, it's okay. Well, the economy is slow. And that's what I'm expecting, a monster of a slowdown. And so the stimulus is kind of like, the stimulus just meets the slowed economy, and it kind of like the two stabilize each other and everything's okay. But when the economy starts to heat back up again, the stimulus still hangs around. And it creates things like speculation, malinvestment, and so on. Like the list goes on and on and on. Okay? I've told you guys the part where I expect this massive slowdown, probably centered around February or March. Will be the worst part of it. But I haven't told you guys yet about what comes on the other side of that. Well, I've hinted at it. What comes on the other side of that is a massive speed up. And that's what I'm expecting this summer. Possibly it's going to be the weirdest situation you ever saw, because of this massive slowdown in the world. It also affects supply chains and supply side delivery. Stores have been keeping up in a lot of places due to inventory buildups that they've had. From times gone by when we had a plenty. We'll call it a plenty. We've had a plenty. Now we have supply side disruptions they're affecting these inventory builds that the stores have, warehouses and stuff. They're starting to affect them, and they're going to affect them an awful lot worse. And when the economy starts to speed back up again, on the other side of this slowdown, this massive slowdown we have coming in the first quarter, moving into the second and third quarter of the year, next year, we got a massive speed up coming where everybody's going to want to get out and do things, build things, buy things, and there's going to be very little inventory available for this. It's going to make prices explode to the upside. That and all the stimulus that they have to do when the economy is slow. So what we're going to do is we're going to go from the worst, probably one of the worst slowdowns we've had in modern history, to one of the quickest rev back up again and get back up to speed on the other side of it we've ever went through in modern history. So this is not stability within the financial system. This creates massive instability. This is the front leading edge of the trigger for the hyperinflation. We're going to start to see prices go up extremely high, and once that starts to take hold in the general populace of not just the United States but the world, it's a concept or an idea that prices are going to be higher tomorrow. Prices are going to be higher next week. Prices are going to be higher next month. Once that concept becomes fully established within the mindset, then what we're going to see is we're going to see gold and silver break free. They're going to have to the upside, of course. When we're going to see cryptocurrencies break free to the upside. And what we're going to see go to the downside is your purchasing power in these fiat currencies. This does not necessarily mean that the DXY or the dollar index is going to go down, but that what you can purchase with your dollar is going to go down. It's going to go down massively. But it's going to hang in there. People are going to continue to use it. So we're going through a massive change. It's coming very, very soon. It's coming in the next, just right in front of us. January, February, March. It'll be tough months. But then April, May, June is everybody is going to start to come out of their cave. And they're going to want, just like the Flintstones, you know, everybody's going to come out of their cave and they're going to want that big rack of ribs or whatever, you know. But everything's going to be closed. So the price is going to go up. I mean, that should just be a no-brainer, guys. When everybody comes out of their cave, I've equated it in my last show to when they let the cows out of the barn in the springtime. That's what it's going to be like. And that's what we got coming in the second quarter. I believe that's going to be sometime in the second quarter of next year. So we got a very strange period in history coming right up, right in front of us. Anyway, let's get started in here and let's take a look now at the silver price. Is it down 41 cents today so far? Now, you know what's going to happen with all of this? All of this, once we get through this period and that central banks go back to stimulus side again, which they're going to have to, because of this massive slowdown coming, then it's all over. I mean, I would say right now, you're seeing the deal of a lifetime. Deal of a lifetime. 22.11 for silver. You're going to get your best deals of a lifetime while it's bearish on this side of this. And then when we move into the other side of this, and you know, this could be the rally that you can't sell into. This could get steamrolling so fast in about a year from now, looking further out, you know, looking out toward the end of 2023, I mean 2022, looking toward the end of 2022, this thing could get rolling so fast that you might not, if you're into something like, say, you got silver, you might not want to sell it. Because if it's going up daily and the dollar's value is going down daily, I mean, you're selling something that is growing in value, well, and buying into something that's weakening. It's pretty hard to step off of that. It's like an escalator that's going too fast. How do you step on the thing without, say an escalator is going real fast, and it's like you're trying to figure out, when do I step on this thing? When do I step on this thing? Going so fast, That's the way with this. If the currency's going down, the tubes so fast and faster every day, and you got some silver that's going up in price every single day, you're like, where do I step off? Might not be any place to step off at a certain point. You might not want to step off. Anyway, just talking about that. Okay, cryptocurrencies today. See, we're seeing prices go down on everything right now. And this is because they're still buying into this BS that the Fed is going to be able to taper down to zero. How can they taper down to zero with possibly the biggest economic slowdown the world has ever seen going to hit very soon? How can they taper down to zero into that? That's like a guy standing there and a hurricane's coming, a Category 5 hurricane. He says, I'm going to fly my kite. Yeah, your kite's going to get ripped to shreds. Come on. Okay, cryptocurrency today is 2213. I never seen it. So I told you guys this was coming. You know what? On my other channel, I told you guys that this was coming. A buying opportunity in the crypto. That we had a deflation coming. Like a little deflationary episode coming where things will start to deflate and you see a buying opportunity. And I even kind of named the price. If I remember back in my shows, I think I said and that was when it was back up, it was 60 some odd thousand. And I was saying it's probably going to see in the 40s. I think I said 40s. I might have said 30s. Can't remember now. Did a show a while ago. I mean, this was months and months ago. I predicted this exact thing that's happening right now, and I represented it as a buying opportunity for you guys. So we're in it right now. Buying opportunity in crypto. If you ever wanted to get into crypto, we're in that period, but it could go lower. It could. I'm telling you, it could. Let's take a look at the mini Dow right here. The Dow Jones at 34,833. It's up 267 points on the day. And now we're going to take a look at crude oil, which is at 68.06. $1.80 up to the upside today. Now, if we're looking at the MOVE index, seeing the MOVE index has come back down some. It was up quite a little bit higher here, like 89.45. Now it's 79.14, so she's come back down a little bit. It's cooled off some. Bonds and rates today, we're looking at rising yields, but still, we're looking at extremely low yields. For a 10-year bond, you're looking at 1.37%, when the inflation rate is at 6.25 by their standards. That means you're going to be losing like 5% of your money. A guaranteed loss of 5% of your money every year. Well, that sounds like fun for 10 years. So 10 times 5% a year is half of your money gone. See, how would you like to have a guy at a street corner and he says, make a lot of money with me. And, and you go over and you say, how? He says, well, give me $100 and next year I'll give you back 50. That's the kind of deal you're being offered here. US 30-year at 1.7%. That's even worse if you're in for 30 years. Heck, at 5% a year or so, be somewhere around the same. You'd be losing about due to inflation. At one time 30 years gone by, you wouldn't have nothing left. Okay. Now we're going to take a look at the US dollar index. 96.27. And it's dropped a little bit today. But like I say, this doesn't really matter that much because it's being compared against a basket of other currencies that are garbage too. So if you're comparing garbage against garbage, you're not making a fair comparison. Why don't they make a U.S. dollar index against Bitcoin, against the U.S. dollar index, and then see what it does? You see the bottom drop right out of the thing over the next year or two. Anyway, thank you guys for listening. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.